I trust we are all well and we are kickstarting this week. So on today's video, I'll be talking about the US dollar consumer price index event that will be released today around 14:30 South African time. And then remember that the daylight savings time have changed. The events are no longer at 3:30, they are at 2:30. So I have the screenshot of the headlines of the US dollar. So it reads, the US dollar is the single most popular currency in the world and is the dominant reserve currency in use around the globe. The USD is often called the greenback in reference to its green, exploring, and can often be a favorite vehicle of traders looking to buy assets from or in the United States. When risk aversion runs high, traders will often look to buy US treasuries, which can create demand for the USD. So that's the news. All this news that I have, I got them from the FX Street FX. So breaking US annual CPI data declines to 6.4% in January versus 6.2% expected. The US Bureau of Labor Statistics reported on Tuesday that inflation in the United States, as measured by the Consumer Price Index CPI, declined to 6.4% on a yearly basis in January from 6.5% in December. This reading came in higher than the market expectation of 6.2%. So hopefully they might come cooler or hotter. So we'll just see. Let's get on the charts. And now looking at the US dollar index, this is a picture of an analysis from the dollar index on TradingView. It's not longer than 2 hours, not longer actually than 1 hour analysis, so it's still fresh. So we on the 4-hour time frame. Take a look at this. Take a look. We have a bottom right here, we have a bottom here respected, we have a support zone that was broken and made return to resistance. We have a support zone here and price is still respecting this zone. So I'm looking for us to push to the upside and break this resistance zone, pull back, impulse, pull back up until we reach that target. So this is the anticipation that I'm expecting on the dollar index. The dollar index, I'm anticipating a bullish run. I'm anticipating a hawkish CPI, which means I'm anticipating a bullish momentum. You understand what I'm saying? Let's go to the real charts on MT4. Taking a look at the USDJPY on the 4-hour time frame. So on USDJPY, we had a negative movement on that during NFP. We had a negative movement. Price rejected, broke out of the zone, impulse, pulled back, tested the previous breakout, and we had a plummet to the downside. Currently we tested 132.274. so I'm anticipating that because we still have a demand zone here. Once price breaks out of this zone, actually it broke out, but it came with buyers came in the market and offered us made this zone a strong support again. It broke out of it and tried making it resistant. I think it was a manipulation to take out the traders who had stop loss there. So now buyers came in again to the market. So we still have a shot at this bullish movement that we can have. So I'm anticipating that there are buyers coming in there, or who came in, and buyers are constantly coming in currently. So we have the moving average here, the 200-day moving average just below price. When the moving average is below price, price will rise. So it's the nature of the market. When the market is up, we sell. When the market is high, we sell. When the market is low, we buy. So currently price is low, and it's a good opportunity to buy USDJPY. You understand what I'm saying? Consider that the dollar is bullish as per understanding on my analysis. This pin bar candlestick showing us that price is not currently looking to go there, because to the downside, because with this pin bars we always move to the upside to test the previous supply or resistance zone. So I'm anticipating price to impulse to the upside, break out of this resistance zone, pull back, more buyers coming in, impulse and continuation. That's our first target, 136.461. Our second target could be at 137.913. So we saw the news, guys. That's actually what I'm anticipating on this dollar. The dollar is still on a bullish run. We're still on a bullish momentum, though we had a short-term downtrend, but currently I'm looking to take buys or long positions on the 1 hour time frame, we had this high there. Price broke out of this zone, so this is a consolidated state. Price broke out of it with a small impulse, currently pulling back to test the zone. Price might even come from here and just go down and test the zone, creating a first bottom, second bottom, and maybe we could buy later during the day from here. So this is what I'm seeing on the USDJPY. I'm seeing this on the USDJPY for the CPI event, a spike that is incoming. Now taking a look at the Euro USD on the 4 hour time frame, the Euro USD during NFP traded above a price at 7,470. It broke out of this resistance zone at 1.06868, and currently it's just being a choppy market right now. But with the dollar index being bullish, I'm not looking to take sell positions around there, but at least this is a strong supply zone currently turned into demand zone. So I'm looking for price to drop and just break below this supply zone, demand zone, currently turning it into a resistance or a supply. So from here we'll be looking for a small impulse and a pullback to test the previous breakout. Then we're looking to continue with the downtrend, target at 1.05726. so this is my anticipation. And then for buyers, this could be a pullback because you hear an impulse. This could be a potential pullback. Buyers could come there and then you could take the market to the upside. But for sellers, we're looking for price, not currently, but for price to break out of this zone and then close below. And then from here, we're looking for a minor pull impulse and a pullback to test the previous breakout. Then from there, we're taking short positions to the downside. I hope we are together, guys. Plus, the moving average is above price, or I can say it's still not decided yet, but something must happen, so you need to give it time. Hence why I'm saying we shouldn't just jump in. We need to wait for it to break so that the moving average can be above price. Remember, the moving average is a great indicator. You can make sure you just test it on your accounts and then you can give me feedback. I've tested for more than 4 years. I have full 4 years trading experience. 4 years 3 months now. I've been trading for 4 years 3 months. I learned for more than 1 to 2 years, and I'm currently even learning every day. I will never stop learning. The markets change. I'm an entrepreneur who always learns. I'm a student, you understand, a student of life, so I'll always learn. But what I can tell you is that I have 4 years 3 months experience trading the financial markets or investing in the financial markets. So this is what I'm anticipating on the Euro USD for the upcoming event, USD CPI, core CPI at 2:30. Let me jump to the gold. Taking a look at the gold market on the 4 hour time frame, the gold market gave us a rally, a big rally. We saw the price coming and impulsing out of this resistance zone, failing to maintain the selling pressure. Sellers probably got liquidated. Price, let me see, we could have a W pattern, something like a W pattern, first bottom, second bottom, and here we also have a W pattern. Price impulse, tested, impulsed up. This was the candlestick on NFP. So price broke out of this resistance zone and broke out of the moving averages, making the moving average below. When the moving averages are below price will impulse to the upside or will rise. So currently we have an impulse out of this resistance zone, and potentially we're looking for a pullback to test the previous zone before maybe we might consider buying the USDJPY, because the gold market, because what I understand is that the institutional investors or institutional traders, the smart money, they are bullish on the dollar, you understand, and the retail traders are selling the dollar. So it might be just an opportunity to lure sellers, and then if they think they will hold longer, then buyers come in, and then it's just a rise, a rocket rise to the upside. But currently, if you can take a look clear, if you can take a proper look here, we have the previous candle close of 9 p.m. on the 10th day of March. So we had a bullish candlestick, it closed there, and then the opening candlestick, it opened, we closed the bullish candlestick closed at 1866, and the next week candlestick on Monday opened with opened at 1872. This one closed at 1866. This one opened at 1872. So there's a difference of 6 points, or I can say 6 pips. So we have a gap here, we have a gap. Price haven't closed the gap yet, so this is also a confirmation that we are determined to take this gold market to the downside. We need to close this gap. The gap needs to be closed, but we don't have a duration on the closing of the gap. It can be closed in the next couple of days, it can be closed even now, just a drop like a rock, or it can be closed during the event. But that's one of the confirmations that I have. I could be wrong. For buyers, you guys can wait for a breakout above that zone at 1914, impulse, then a pullback. From here you take your buys, stop loss just below, and then target the next possible target at let's see, the next possible target. The next possible target could be at 1959. That's the next possible target for buyers. So currently, as for me and my setup, I'm looking to take sell orders, or I'm anticipating sells from here. Then I can consider buys, but I'm not really interested in the sells, so I won't be taking sells. I'm positive on the gold, but not for now. I'll start to buy the gold at 1853. So this is what I have for the CPI event spike volume that's coming into the market, volatility at 2:30. So it's going to be a crazy event. This will break the markets. We will see what will happen for the whole month and even the coming month. So stay blessed, guys, and good luck. Happy trading. Cheers.